Hello, you are watching Market Watch in the studio with Liam Hulse. In today's release, we'll cover the following topics. The Federal Reserve lowers interest rates to 0.25%, G7 meeting in online format, oil and commodity currencies under pressure, China is returning to normal operations. Even before the markets opened, the Federal Reserve announced a reduction in the basic interest rate by 1% effective immediately to 0.25%, while at the same time expanding their quantitative easing program by $700 billion. All these measures are taken with one goal, which is to curb the panic of the US stock market while providing the most efficient financial and monetary support to the economy and business. Trading activity is booming in the US dollar, and as a result, the euro and US dollar currency pair has increased dramatically. A sharp decline in rates led to a weakening US dollar, which is not unusual given the Federal Reserve slashed rates by 1%, and such decisions by central banks usually have a strong impact on currencies. I would also like to draw your attention to the upcoming meeting of the leaders of the G7 countries, which will target the issue of combating the economic consequences of the coronavirus epidemic. Most likely, the outcome and follow-up comments from this meeting, which will be held in an online format, will create major volatility for major currencies and stock indices of the world. And now let's move on to the oil market, and as a result to commodity currencies. The price of WTI oil still remains above the psychological level of $30 per barrel, but the mood of traders is bearish, because as time goes by, the amount of buyers becomes less and less. That runs the risk of further collapse in oil prices. Against this background, quotes of the US dollar and Canadian currency pair continue to uptrend despite the weakening of the US dollar. The collapse of oil prices at the level of $30 per barrel will trigger the growth in this pair to the psychological mark of 1.4 This level of resistance remains a local target for buyers. We conclude today's review on a positive note as China continues to resume work in factories, seemingly returning to normal. However, the financial markets are not expected to stabilize until the situation in the US and Europe returns to normal. That's all for me. Closely monitor the news flow and get ready for the unexpected moves of the market.